Now, I realize that many traders out there do not understand how to find that directional bias. So I'm going to show you on the pound US dollar on the daily time frame, 23rd of the 1st, 2024. We're going to go through how we look for that directional bias. Now, it's all about understanding your market structure, and there's a great video on how to map your charts with structure. You can watch that at the end of this video. But the key concept is we're going to look at some areas of structure in this video again, but with the use of imbalances as well. Understanding the imbalance in the market is going to show you where those hidden orders remain. There's hidden blocks of orders which need to be filled or run through as liquidity. So if we look at the last move here to the downside, this move here, this shows me a break of structure. So as a swing structure, we've broken out to the downside and we're looking for that pullback. So understanding a larger swing, we're looking for a pullback for potential sell back lower. And we just mark off this as a strong swing high, and this would be our weak swing low. So potentially we're looking for reversals now to target this low. Now, the way we do this, we understand the use of supply and demand. We're looking for that last buy to sell mode, which is this big buy up here to the downside. So for me, anything that comes within this zone, as a larger zone, is where we can look for those reversals. Now, we can refine those zones as well, but understanding the last buy to sell move is important. So when we see the market down here, as we see the reversal comes as we see this minor break here to the upside of this internal structure. Now, at the same time, how can we know that the directional bias is changing? If I zoom in, if you've not ever gone through the use of imbalances before, then this should help you to understand how you can apply it for that directional bias. Now, the imbalance is created when we see a momentum move. So you can see this big bearish candle drop away from this pin bar. When this happens, from the low of this candle here to the high of this next candle, when it's closed, this candle, it creates this area left over. This is an area of imbalance where we see the blocks of orders remaining, where either they're going to be run, okay, or they're going to push the market back lower. Now, on this occasion, the market is run through. Once we see this candlestick closing through, this is taking and clearing out those orders, and it gives us a directional bias as bullish. At that point, we know the market will want to run this swing high. When the market closes through that swing high, it changes our directional bias. Now we have a bullish bias, and we also expect that the market is going to do a swing pullback. So once we've seen this reversal, we know that the market will want to do a pullback against this swing to then head back lower to take out the weak low. And that's exactly what happened. From this point, we can see the market has made that pullback. So let's go closer again into that and see how we can read that directional bias with those imbalances. So now we know that this is the imbalance reverse price. We also close this swing high. What we then need to do is look for our next imbalances, and we'll mark those out on the chart. So we have an imbalance level here. The next imbalance level is above. And do we have any more? So we don't have any more imbalances until up here. So that's my next imbalance level. And that looks like that's it for now. So they are the only imbalances that we currently have. So pull that across. So once we see, you can see the market, once we broke out of this swing high, we knew the swing pullback was going to occur on that time frame. We come into this area of imbalance, reject it, we fill it to the pip. So we expect the next time the price comes to that area, we will close through. This pushes the market back down. So what this imbalance has done is basically it pushed the market back to find an area here of demand. So in theory, we have this area as a demand zone, and we can refine that zone down to here, where the market pulls back in. So this is where you can potentially look for a entry, a counter trend entry, sweep below here, nice looking pin bar, and we target to take out this imbalance. So if you was using this as a directional bias, we would look to go long here to fill this imbalance and remove it. As we already filled it once, we expect it to be removed, but that will be my target just over a 3-to-1 risk to reward. Now, once we close that imbalance, we expect the market to go to the next level. This is the next level, and we can close that at the same time. So our directional bias is still bullish at that point. Now we can look for the next area. So we do have this as our last buy to sell move. So you can see that the market pushes down here and we buy away. Now we can refine that to this area here, which again is a new sell to buy move, which broke this area. And you can see the market comes back into this area. Nice looking rejection candle out of there. A doji as such with a nice bullish move away. So at that point, that signals to me that we could look to go long once again. So from here, we would look to go long and we can target the next imbalance, which is this one here. And see that gives us over a 3-to-1, nearly 4-to-1 risk to reward. And that's how we look at that directional bias. We keep going with the market. At this point, the market's gone up, we closed through, okay, that area. So that means we're going to go higher. So now what you can do is look for your next imbalance level. And we also need to incorporate swing highs and lows for the next area of imbalance. If we look at this market, we have a very, very small area here. Very small area of imbalance there. We have another area of imbalance here. And a very small one above. But we won't mark that one. We'll just mark these two out for now. So as we've now closed through this imbalance, we expect the market to want to go for this imbalance next. And where does the market head towards? It goes for that imbalance. So once we see this pullback, we'll understand we're looking for our areas. There's our area, which is the last sell to buy move. And we can map this out by understanding structure. And it's important that you understand your structures in the market. We do have a very small structural pullback there. And that's what causes that market to continue higher until we get to this imbalance. Now notice when we got to this imbalance this time, we did not close through. We rejected it, and the market in fact has pulled back to this low. And I do believe we just closed through by a pip or so. So at this point, potentially the market could well be coming back to an area where we could see this swing to reverse back to tag out this weak low. And that's essentially how you look for those imbalance zones for that market direction. Once you understand the market structure swing you're within, this is our current daily swing. And we also need to understand this is our internal structure, reverses that high, which gives us this reversal. And now we know the market has been bullish. Now you could use this as one full swing to here and a pullback, and the market continues bullish. So once you understand the directional bias with the use of your market structure, and again, watch that video coming up, which goes through the mapping of market structure and the use of supply and demand zones, and you incorporate the use of these imbalances for market direction for the bias, it's going to help you to start finding that true daily directional bias. So again, until we actually close through this area of imbalance, we will not go to the next one, which is above. We don't have to go to fill that imbalance, but the orders here could be the orders inside this area of supply, okay, which pushed the market down, or we could just push down from here. So how do we know where the market's going to go next? Quite simply, all we need to see is the reversal. So again, here we had this push up. We just broke that high with that bullish move, and now we've pushed down. Now we'll check in a minute, see if we actually closed that low. If we did, then we're looking for continuation to downside from here. Let me just double check this for you. So we have a low of 1.26124, 26105. So that did indeed close below the low of this candlestick. So at this point, we have a bearish bias with market structure. Now, looking down here, where's our next area of imbalance? Well, the only imbalance we have left over, the first one is this move here. Now, that could be where we can see the market want to head towards. Now, if we look at current price, once we get to this point, the market pulls down, we break, we do leave this area of imbalance. Now that was removed through with this candlestick. So I would expect to perhaps see the market want to run this high first to take the liquidity, perhaps to fully fill this imbalance as we didn't fully fill it, and then look for another drop. Now, of course, if we do go up there and we close through, that means we're going to go up to the next area potentially. And that's how you look for directional bias. And this is not something that anybody really teaches. You can look around on YouTube. You're not going to find somebody who shows you how to use these imbalance zones in this type of way. Now, of course, if you want to follow along with my analysis like this on the USD pair, which I share every single day inside the free Telegram channel, you can check that out. There's going to be a link. It's going to pop up right now.